Stocks on Wall Street end the session mixed, with the Nasdaq shedding more than 300 points, weighed down by shares of Nvidia. The Dow manages to hold on to some gains even after falling 300 points from the highs of the day. Asian markets are lower, tracking the declines on Wall Street, while the GIFT Nifty is indicating a gap down start for our own markets. Crude oil prices fall as talks to end Russia's invasion of Ukraine could ease sanctions. Gold prices too have declined as investors await commentary from the Fed's Jackson Hole symposium. Online gaming companies are bracing for a body blow. The cabinet approves the much-awaited legislation. The bill, which is likely to be tabled in Parliament today, is likely to ban online money gaming and prohibit any fund transfer or advertisements related to it. India and China decide to resume direct flights and border trade following key talks between External Affairs Minister S. Jaishankar, NSA Ajit Doval and Chinese Foreign Minister Wang Yi. And heavy rains and high-speed winds continue to batter Mumbai. Red alert has been issued for Thane, Raigad and Pune. Orange alert has been issued for Mumbai, Palghar and Ratnagiri. Multiple local trains on the Western Line stand cancelled. Good morning. All of these headlines and a lot more lined up over the next 30 minutes. You're watching Power Breakfast right here on CNBC TV 18. It's midweek and in the Mumbai News Centre, I'm Hormuz Fatakia. Let's first take a look at how the Asian markets are faring. It's a negative start for the Asian indices, mirroring what happened on Wall Street overnight, and the Hang Seng down almost 0.6%. The Taiwanese index is the big underperformer this morning, down around 2%. Similar sort of cues coming in from Japan and South Korea as well. The Nikkei in Japan is down 1.5%. The biggest underperformer, more than the Taiwanese index, is the Kospi in South Korea, which is down over 2% in early trading today. So it's a red screen across the Asia Pacific. And if you pull up the GIFT Nifty, I'll give you an idea of how our own markets are likely to start off, where again the implied open suggesting a 75-point downtick at the start of this midweek trading session. Remember, we are coming on the back of 4 successive days of gains, but that 25,000 mark on the Nifty continues to remain elusive for the index. Despite crossing it multiple times, it has not managed to sustain above those levels, and that's what the implied open is indicating. Now we can move towards that 24,900 mark again at the start of trade. But how will all of this impact our own markets? Our research team is joining in with the trade setup, the stocks that are likely to be in the news, and of course the setup on the F&O side of things. Firstly, Vinny joins in to get all the market cues that you need to watch out for. Vinny, good morning. Well, it's been a good start to the week, but that good start is likely to be put to test today.
Absolutely, that's what is going to be happening. It's like pouring last week. Yesterday we saw in terms for Mumbai, but now seems like the bears are coming running in to hurt that green that we saw coming in. Now, US market that closed mixed in yesterday's trading session. Nasdaq as well as S&P 500 fell, mainly led by the tech stocks. So that was a major impact. The Magnificent Seven that we talk about in the US, that saw a fall coming in, leading to that fall overall for the Nasdaq and the S&P 500. Investors are waiting that commentary that could come in from Fed Chair Jerome Powell or this week that we're watching out for from the Jackson Hole symposium. So that is key to watch out for. Now, other than that, in terms of FII and DII, we are keep seeing that FII sold in yesterday's trading session, while DII continued to be buyers in the trading session as well. So, DII buying has continued and sustained. FIIs again are back to sellers. Now, in terms of cues for trade that we're watching out for, Vedanta demerger is a hearing in the NCLT is what we're keeping an eye out on. Other than that, keep an eye out on Nazara Tech, Delta Corp. All these could be in focus after online gaming bill is likely to be tabled today. They have passed a draft bill right now. Now they'll be tabled. That will be tabled in the parliament today. So big important one coming in there. RBI minutes are due later today as well. So that is key to watch out for. Also, like I mentioned, on the radar, we also have Jackson Hole Symposium meet that is going to be kicking off today. India, China, they have agreed to resume direct flight and boost business. So that is key to watch out for. And External Affairs Minister Jaishankar has embarked on his 3-day visit to Russia. So important updates that will come in over there as well. As of now, Nifty implied open is indicating a red star, down 75 points.
Indeed, some choppy moves coming in there on the GIFT Nifty from 75. We are at 65 now. It's in just a matter of seconds. But Vinny, thank you for that. Over to Upasna now, who would list out the stocks that you need to keep an eye out for today. Upasna, good morning. What's on your list?
Good morning. First up, let me start with Lloyd Metals. It emerges as the successful bidder for 2 of its coal mine. Next up is SRF. The company has signed a strategic agreement with Chemours company. This is mainly to manufacture advanced fluoropolymers and fluoroestimers from its Dahej facility. Next up is Endurance Tech on our radar. The company has approved capacity addition for ABS disc brake systems and even brake disc at its Valoj plant in view of rising demand for advanced safety products. Next up is NTPC Green. Two of its projects have started their commercial production. Now coming first to the company's solar PV project in Gujarat, it is declared for commercial production with effect from 20th August. And the second project, that is the company's hybrid project located in Gujarat, is declared for commercial operation with effect from 21st of August. Next up is G&G Electronics. The company has reported its Q1 numbers. The revenue saw a downtick of 29% sequentially, while the PAT saw a 15% growth sequentially. Next up is Nazara Tech. This will be in focus as, according to sources, Online Gaming Bill 2025 proposes a bar on online money games. Next up is HAL on our radar. According to sources and media reports, Cabinet Committee on Security has approved purchase of 97 LCA Mark 1A fighter jets for 62,000 crores from HAL. Next up is GRSE. Even this stock will be in focus on the back of its con call, which was held yesterday post-market. The company says that its current order book stands at 21,700 crore, and RFP, which was long due from Navy for P-70 Bravo project, is likely to be given by the end of 2025, and the company expects order value of nearly 70,000 crores from this. And lastly, Cochin Shipyard also in focus on the back of its again Q1 con call, which was held after market. It expects 14 to 15% top line growth in FY26, and it also expects to double its revenue by 2030 or 2031 is what the company is guided. So all in all these stocks will be on our radar for today.
Oh yes, keep an eye out on Nazara and all of these defense names as well. HAL for that prospective order win, Cochin Shipyard, Garden Reach, both giving out commentaries in their earnings call. Upasana, thanks a lot for that. A lot of stocks to keep an eye out for in today's session as well. Lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning. Well, yet again, 25,000 thereabouts, but still not above it.
Good morning, Harmaz. So it's the penultimate day of weekly expiries. We'll have to see on which side the positions are built. But we have seen gains for fourth straight day, and it seems that what GIFT Nifty is indicating, those gains, fourth straight day of gains, can be paused today. But yesterday's Nifty's move of more than 100 points was mainly contributed by Reliance, which is the top Nifty contributor, which had seen a move of almost 3%. But good part was that mid-cap index saw a healthy gain. It was up almost 1%. It had outperformed benchmark indices comfortably. For today, GIFT Nifty is indicating a start with a cut of almost 70 points. And even if you look at the PCR data, all these volatility index, those data did not indicate much about the FI flows. And that you can see in the cash market, the FIs have sold just rupees 630 crore. Similar move was seen by DIs. They have bought more than rupees 2,200 crore. Even if you look at the derivative side, the selling figure by FIs was just rupees 35 crore. And they have reduced long positions by 21 contracts and added short positions by nearly 200 contracts. Now, long exposure remains at the same level that we saw on the previous day, that is 10%, and 91% remain on the short side. So that thesis still continues that if there is a positive news flow, we will see short covering once again. Now, what does options data indicate? 25,000 level that you have mentioned, it remains very important level, because for the last 2 days, we have seen that Nifty crossing that level intraday but failing to hold on to that level. That's the reason around 25,000 remains important resistance, that is 25,020. That is the 50-day moving average. As far as support is concerned, if you look at the move of Nifty over the last few days, it's trading in a range, that is 24,700 to 25,000. That's the 24,750 for now I have taken as a support. That is also 20-day moving average. Now coming to the stocks, two stocks are in the band, that is Titagar and RBL. One stock that has come out of the band, and we'll have to see how does it move, that is PG Electroplast, because huge shorts have been built over the last few sessions in this counter. And apart from these stocks, keep an eye on Exide Industries. Look at the last hour move in the Exide Industries yesterday. It saw a big up move, was up almost 3%, so fresh longs were added. And Solar Industries, it's an interesting bet I have taken, because yesterday HL order was announced. Now, if you remember, Solar Industries also awaiting Pinaka order. So if government goes ahead and announces this order, it can be positive for Solar Industries.
Oh yes, indeed. HAL, Solar Industries and more importantly, PG Electroplast out of the FNO ban, entered the ban on the 12th, and since then the stock has had a 3-day up move when the stock was in the ban. So Darshan, thank you for that update on the FNO side. Let's now bring you some excerpts from our conversation with Rajiv Batra of JP Morgan, who weighed in on the FPIs as a factor in the Indian markets and the need for double-digit earnings growth for Indian companies. Listen in.
Foreign investors are growth tourists. They invest in the destinations that offers them premium growth. Till India was offering them, India was all in favor. Now, even if I will say that, absolute sense, India valuations are expensive, but in a relative terms, looking at average valuations of India to emerging markets or other EM peer, we are well below the average ranks of that premium also. Still, people will not visit because the complaint will be that PEG ratio of country is still not around 2 or below 2 kind of a mark. So only one variable which is important is growth. And hence you can see in flows, if you take the passive guys out, because in 13 billion, close to 8 billion has come from the passive side in India, net inflow. Active guys have seen close to $21 billion kind of an outflow. So growth is a key ingredient for active foreign fund managers to make a comeback. It will start with your high frequency macro growth data points, which are your monthlies and weeklies, and then followed up with the earnings data print. We have a pretty good high single digit earning growth for MSCI India for first quarter FY26, but that doesn't still bring India's PEG ratio to close to 2. So once we come around the territory of 2, that is around 12 to 13% earning growth kind of a criteria, it may satisfy my foreign investors' need.
Rajiv Batra there of JP Morgan. Take a short break. On the other side, we bring you the big story of the day on the online gaming bill. Stay tuned for more on that. Welcome back. Now, online gaming companies are bracing for a body blow as the online gaming bill gets approval from the cabinet. Now, this bill is likely to be tabled in Parliament today and is likely to ban online money games and prohibit any fund transfer or advertisements related to it. Ashmit has more on this. Ashmit.
Is it curtains for the online real money gaming industry? Well, the answer appears to be a loud yes. If what sources within the government appear to be telling us is that a bill has been cleared, the online gaming bill has been cleared by the cabinet to be tabled before the parliament. Now, what exactly does this bill entail? Well, the bill is sweeping in the nature of restrictions it contemplates. Number one, it provides that online real money gaming, any game that involves weather, skill or chance, if it involves transfer of money, well, that's simply not permissible. That's what sources are telling us. Not just that, additionally, this bill, what it tries to do is that it tries to bar any form of advertisement or promotion of such online gaming platforms. Also, banks are likely to be barred from providing any transaction services to and fro for the funds of the user versus the funds of the online gaming platform. So banks are also barred. Not just that, this bill also appears to have, sources tell us, also appears to have teeth, wherein there are penalties that go up to as high as 3 years in jail in case of violation, penalties that go up to 1 crore rupees in penalty. That's in fact on the penal side. And not just that, what sources tell us is that this bill also likely to provide sweeping provisions where in case a company is found to be violating, in that scenario, any and all officials who are found to be in decision-making spaces of that organization are also liable to face action. So sweeping provisions, this calling for curtains as far as the online real money gaming industry is concerned.
Sweeping provisions indeed. Ashmit, thank you for that update, and we'll continue this coverage all through the day right here on CNBC TV 18. Moving from India to Wall Street now, and the S&P 500 pulled back on Tuesday, weighed down by shares of Nvidia and a broader decline in a lot of these technology stocks. The S&P 500 lost over 0.6%. The Nasdaq was down over 1.5%. The Dow Jones made a record high, but then slipped nearly 300 points from the highs of the day. Nvidia was down 3.5%. AMD, Broadcom also saw cuts of anywhere between 4 to 6%. And other major tech names like Tesla, Meta, and Netflix also were under pressure anywhere between 2 to 3% lower in yesterday's trading session. We're moving on, and Treasury Secretary Scott Bessent has said that Donald Trump's talks with the leaders of the European Union and Ukrainian President Zelensky yielded a good outcome, and spoke about why Russian leader Vladimir Putin wants the war to end amidst the economic impact. Listen in.
Both sides are ready for this terrible conflict to end, and one of the ways to make President Putin want it to end is on the economic side. The Russian economy has 20% plus inflation. Right now, it is a war economy. I think more than 25% of the GDP is coming from the military buildup. So, you know, it's a very imbalanced economy. They're the frozen Russian assets. The runoff from those is now being used to finance the war. So, you know, there are a lot of moving pieces here, Joe.
Now, Scott Bessent also added that India is profiteering by buying Russian oil, and says that India and China's situation on oil purchases is not the same. Here's what he had to say.
If you go back and look now, I believe India had less than 1% of their oil, 1%, and now I believe it's up to 42. So wow. India is just profiteering, or they are just profiteering. They are reselling. They've made $16 billion in excess profits, some of the richest families in India. So this is a completely different thing. Like this India, what I would call the Indian arbitrage, buying cheap Russian oil, reselling it as product, has just sprung up during the war, which is unacceptable.
The other big trigger this week is the Jackson Hole Symposium, where Fed Chair Jerome Powell is likely to speak, and Allianz's Mohammad El Aran believes that the Fed should cut rates for the sake of the economy. Listen in.
I don't think he should cave. I think he should cut for the economy. So I look at the labor market. The only indicator that allows me to sleep at night is the unemployment rate, 4.2.
It's remained steady.
It has remained steady, and that's the number he's looking at. But if you look at other indicators of the labor market, if you listen to what the companies are telling you, if you look at what's happening to people graduating from college, this is a labor market that is softening at an accelerating rate. And you have to be careful about this.
I'll take a short break. On the other side, cues from the commodities market. Stay tuned. Welcome back. Manisha Gupta now joins in with cues from the commodity space. Manisha, good morning. Oil prices continue to fall, but what else is on your radar this morning?
Well, most of the commodities really are on a declining mode as I look at the chart today morning. I'll start with the crude oil prices. As you mentioned, we've seen a 1% decline overnight. And with that, we're down by 10% for the month of August. Well, the crude oil prices with this decline are trading at a 3-month lows. The potential Russia-Ukraine peace talks, softer enforcement perhaps of secondary sanctions going forward, and the increase in supplies by OPEC Plus are some of the factors that have been keeping the crude oil prices under pressure. But it's not just energy. Take a look at the metal prices. We saw gold prices decline 0.5% overnight. Silver is down almost 2%. Iron ore prices fell 1.5%. Steel is back at around multi-week lows. Aluminum prices trading at a 1-month lows. It has been about weak demand that seems to be weighing onto the market, and then it has been about very weak Chinese economic data. Manufacturing, industrial production have slowed in the month of July, and then U.S. has also included more additional categories of various metals within that tariff gambit, and that really seems to be weighing onto the market. There's a lot of uncertainty, but as we've been talking, Hormuz, all eyes on the Jackson Hole Symposium. This is going to be the last one for Jerome Powell. The markets really are anticipating some strong statements to come in.
Oh yes, indeed. They are anticipating a lot of statements from Jerome Powell on the road ahead for the Fed policy. Manisha, thank you for that. And let's move on to the India-China ties now. Both countries have agreed to resume direct flight connectivity between the Chinese mainland and India at the earliest. Now, both sides have also agreed on the finalization of visas to tourists, businesses and media and other visitors in both directions. Now, they've also agreed to reopening of the border trade through the 3 designated trading points, namely Lipulekh Pass, the Shipkila Pass and the Nathula Pass. Both countries have agreed to facilitate trade and investment flows through concrete measures. And getting you the latest weather updates then from Mumbai as heavy rains continue to lash the city. The IMD has issued fresh alerts for today. Sandhya is joining in now with the latest. Sandhya, tell us more.
Good morning, Harma. So, as far as the alert for the entire day is concerned, for Mumbai, the category is orange, but till 10 a.m., that is nowcast warning. The category is red for Mumbai, Palghar, Thane, and Raigad, along with Pune as well. Now, talking about the impact yesterday's rain still has. Yesterday, as we all know that in the last 21 hours, it rained over 200 mm, which is quite significant, especially for the month of August. Because of that, there was massive waterlogging in multiple areas in the city. And in fact, Mumbai's Methi River also almost touched its danger mark. And as a result, 400 people had to be evacuated and rescued from the nearby areas. Other than this, there was an impact on the train services as well. Yesterday, Central Line and Harbour Line trains were suspended. And Western Line's trains were running with a delay of over 25 minutes. Talking about the situation today, Western Line, certain trains are cancelled and other trains are running at a delay of over 10 minutes. Central Line trains have also started, but there's a delay on that line as well. Traffic is there on the Western Express highway the way it was yesterday. As far as today is concerned, BMC has not declared any holiday for schools and colleges, not even for any offices. But other than Mumbai, every other part in the MMR region, that is Mumbai Metropolitan Region, a holiday has been declared for schools and colleges for today because Raigad, especially Raigad, has red alert for the entire day for Wednesday. Now, other than this, another significant incident which took place yesterday, Hormaz, were two monorails got stuck, and as a result, 582 people were rescued from the first monorail with the help of cranes and fire tenders, and 200 people were rescued from the second monorail.
Indeed, there was an incident that was in the news last evening. Sandhya, thank you for that update. With that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the day's trade on the other side.